From the morning reading, IWM cues lead bounce from a higher low. All 9 sectors moved higher on Monday. XLB, XLE, and XLK were the strongest sectors, while XLU was the weakest sector. Oil futures rose $1.52 to close at $47.89. Breadth strengthened as advancers led 23.28 to 7.26 on the New York Stock Exchange and 18.08 to 8.03 on the Nasdaq. And hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is currently 5:39 a.m. Central Time, and I'm recording this in preparation for the market day of May the 17th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive in. It's going to be a little rough this morning. I'm working from a laptop, and things are always a little different when you're doing this, but I thought it important to go ahead and push this video out. I missed yesterday, and we had a hedge risk level increase yesterday. We went to level 2. Very interesting action yesterday. We'll get into the charts in just a moment, but also let's take a look at the morning report. And so far, with the overnight action, we're slightly positive across all 4 of the U.S. broad market indices. S&P futures are up about 2.5 points, or just above scratch. Russell futures also just above scratch, as are the Dow futures. Nasdaq's up a little bit more robustly. It's up about 0.25%. Crude oil is up about 0.38%. Euro's up just above scratch. Bonds down just below scratch, and gold is also down just below scratch. And overseas action slightly mixed, with China down about 0.25%. Hong Kong doing much better, up over 1%, as it's Japan. Germany up about 0.25%. United Kingdom up about 0.75%. In terms of macroeconomic reports for today in the United States, of note are building permits, CPI, and housing starts, along with capacity utilization rate and industrial production. So a pretty good slate of pre-market reports coming out for the United States. In terms of looking forward to tomorrow, we have the weekly version of crude oil inventories, and the Fed FOMC minutes are tomorrow. So likely to be some anticipation counted into the markets by the Fed minutes. Let's go ahead and go to the current volatility conditions. We have been increasing of late. The 5-day versus the 10-day average 2 ranges have been increasing. You do see the short-term VIX right now is a 13.59. Skew is benign. IV percentile for the S&P and the others is still very, very low, with the S&P coming in at a 14, the Russell at a 16, Nasdaq at a 12, and the Dow at a 10. We had standard deviation moves put in by all 4 of the broad market indices yesterday, up 1 standard deviation on all 4 of them. And that was following a prior day where we in the S&P had been down a standard deviation move. And you look at the last 5 trading sessions now, and you see we've had 4 standard deviation moves put in, but 2 of them were up standard deviation moves, and 2 of them were down standard deviation moves. So considerable volatility, but in the end, not really achieving anything. Let's go ahead and go to the chart. We'll use the S&P futures today. We'll zero in on the most recent action. You see we've been following this head and shoulders pattern, and the expectation is if this neckline breaks that we could drop. And most people are thinking probably drop about 4%, and probably would drop somewhere in the area of about 1950 would be probably one of the first targets. We'll define that a little bit better if indeed the neckline breaks and we start to make some real potential out of that. As it is right now, we just keep bouncing back and forth in a relatively narrow range, and we're waiting to see, does this break up and invalidate? I believe one of the morning authors talked about a higher low yesterday, And indeed, you see this action right here, where the S&P broke at about 2035, with the prior swing low at about 2031. So indeed, a higher swing low, it would seem, at this point. We'll see where today's action comes in. Does that validate that swing low? But that higher low is in with a lower high. So we've got to see something start to coalesce around one side or the other, be able to see what our short-term trend is going to be. Right now, I would still stick with a short-term trend that is bearish until proven otherwise, though you start to have the setup for perhaps just that happening. So keep that in mind. In terms of the Dow, I think we're going to find that the chart is looking very similar. These have been marching in lockstep of late, and indeed it does look very similar, with one important exception. On the Dow, we have a lower low. So this action here is not calling into question yet that we are in a bearish short-term mode. This is confirming the bearish short-term mode. So you see you have some differences starting to show between the different indices. Nasdaq, of course, has been relatively weak of late, and it's been chopping around inside the cloud, the very definition of sideways action. And you look at we could probably go now, since this break here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading sessions where we essentially are trading within ourselves. So that's almost 3 weeks worth of action where the Nasdaq really has not either broken down or broken up. So it's just trading in a very, very small range. And then, of course, the Russell also, with yesterday's action, put in what we will call a similar low. And certainly it's had by a very modest amount, a lower low than the prior swing, though it's probably best to just simply call these similar lows and just to simply say that this is an area of support and not any significant action beyond that, especially if you focus on the closes. So that is combined with, at this point, what looks to be lower highs. So that continues to be relatively bearish, though expected at some point to break out of that pattern. Let's take a look at volatility. Volatility is pretty low, fairly benign, not a lot of overhead resistance, not really anything that's going to signal at this point that we are going to break that pattern, and that would, of course, infer that the equities are moving. Let's take a quick look at bonds. Bonds have been a little bit more demonstrative lately, and indeed bonds have broken out of what was quite a bit of overhead resistance. Got a Chi cloud breakout here, and bonds have been coming higher, and indeed have come up near the prior swing highs. Haven't quite got there yet, and so backed off from there. So not definitive by any means. No leading action here that's of significance. I think it is of some significance that we broke through all this resistance here and got into this area, but yet no clear breakout to take us to former highs in a big way that would tell us that they expect the equities to be dropping. So you see there's bulls and bears are in very much conflict right now and are fighting it out on both sides in earnest, with neither one having really any significant edge. Probably as we get to the daily report, we're going to find that the bears have got an overall edge in the mechanical signals, but still nothing really to get too excited about at this point. We'll take a quick look at gold and wrap up the charts. Gold, of course, had been breaking out to the long side, but has been in this really messy consolidation pattern. At some point, we would expect this would break to the long side again. There's a lot to say and argue about a bull gold intermediate term trade at this point, but you're going to have to be exceedingly patient as gold goes through these breakout periods like this one here, where you get these great bursts and then goes sideways for weeks at a time, and then another breakout just to go sideways for a couple weeks. So you have to kind of lay in wait if you're going to trade that gold market, it would seem. Let's go ahead and go to the daily report. And in terms of our market timing signals, the first thing we'll focus on is that we still are, we believe, in phase 5, which is the descriptive, the end, short term, the break of diagonal and horizontal support. That set us up into this current pattern that we're in, though it hasn't really followed through in any significant way. So that's of note to the bulls. In terms of the mechanical timing signals, the first one from IBD, uptrend under pressure, so that's in warning status. GMI index, the second one, is clearly in a warning status with a 0 out of 6 on the primary signal, and the more sensitive indicator, the GMI2, at a 3 out of 8. That is signal